Welcome back to Market on Close. S&P 500 right now almost at 60.50. Mr. Kevin Green looking at the charts. KG, our guest from the top, was talking about a lot of call action at 6100 and a lot of support pretty close by down below. Tell me what you see.
Yeah, especially actually if you look at the tomorrow's expiration, the 6100s are actually printing the top contract for today, and they're going for around 85 cents last time that I checked. So I wasn't unable to watch the interview, but yes, that is actually a level that is starting to get a little bit of traction there right now. And then the 6050 is what we're hitting as far as an area of resistance here today. I mean, we actually did try to cross above that, kind of pulled back a little bit, consolidated down to around 6035, and now we're attempting it today. We saw some early call flows into the 60-60s earlier this morning. So if you do see a break of this level, we could see a follow through pop here. Now we have an estimated gamma exposure, a level that's sitting at 60.50. Right now it's sitting at around $85 billion for the gamma exposure to the upside there. So if we were to able to rocket higher, I mean, it would be a pretty decent squeeze, but I'm not sure if we're going to be able to break through that wall. You probably have some pen risk sitting at 60.50. And if we fail, looking at 60.30 as that area to really try to catch us for now. But this has actually been a pretty decent day. We came out of the gate swinging. We came back, kind of retested that 6,000 level. We got 6 points close to that 6,000 level, and then we've been up ever since, and now we're just consolidating. This is exactly what you really want to see. Market participation continues to expand here. You're starting to get more participation when it comes to the mega cap names, so this is looking pretty good. Now tomorrow, Oliver, we do have the VIX expiration, and I had a couple of people DM me and ask me about that. Not seeing anything that's really out of the ordinary. The largest trade that was on the tape here today was actually the February 19th expiration here. Looking at the 23 calls, somebody bought about $1.75 million worth, roughly around 23,000 contracts. That's the biggest on the tape here. I didn't see a lot of aggressive VIX call buying outside of that particular trade here. So I'm not sure if that's going to be a major event as we open up tomorrow. It doesn't look like it's going to be one for now. And the trend continues to remain. We see volatility really being crushed. Historical vol starting to come down here a little bit. And then we might also start seeing this dispersion trade start to creep back into the market, where you start seeing a lot more exposure to the mega cap names that have sold off, like an Apple, or maybe some of these other names that might be trying to break out, like an Amazon, and then individuals maybe fading the broader index, trying to get that alpha to the upside. And if you do see that type of scenario, especially in this environment, that's actually net positive for the S&P 500. That creates a concentrated market. But if you're looking at the vol structure right now, it seems like that dispersion trade's probably a little bit more favorable for a lot of traders than what we've seen over the last 2 weeks or even 3 weeks.
Okay. So what do we do with that? What's the trade-off then? What kind of that's a unique type of alpha, a unique opportunity, right?
It is a unique opportunity. So the environment that you would start to see is obviously a little bit more risk on. I think we can say that that's definitely taking place here today. A lot of the commentary around, going to Mars and stuff like that, Rocket Lab hit to the upside, whatever, it is what it is. But that does create FOMO into this market, and that's what we are starting to see. And then you have stocks like Apple that did not have really great news, hitting some key areas of support that might actually get a little bit of flows into the stock. NVIDIA, a lot of call flows into the 157 157 strikes pretty much across the board over the next three months here, Oliver. So you're starting to see a little bit more of an appetite on the call side, especially for these mega cap names. And if that's going to be the trade for a retail trader that has exposure to that, it really kind of just says maybe the concentration kind of gets back into the market. You still have some secular trends when you're looking at materials and industrials, but it does appear that the market really is structured for more concentration rather than this broadening out. And maybe we see a little bit of a rotation taking place over the next couple of weeks here.
Okay. All right. I like that. As far as operationally, as you mentioned, VIX under a little bit of pressure. We're getting stocks up, vol down by that measure, so that's kind of normal. Liquidity feeling normal as well. It looks like from the measurements you watch, what is it, CME or SIBO, that it's pretty smooth?
Yeah, so the CME chart, the liquidity tool, and anybody can have access to this. You just got to go to the site. So you're going to see a massive compression that occurred yesterday, and that's just because of the holiday. And that really also coincided with a fair amount of volatility in the market. But today, if you're kind of looking at that liquidity actually did get back into the market. We probably will see a rapid expansion for tomorrow's print there, which is actually looking pretty good. And then if you're looking at high yield credit spreads, those are starting to move to the downside. And we have seen that relationship of high yield credit spreads and broadening of liquidity being a dampener when it comes to volatility. That once again is going to be a little bit of a driver for equities moving forward here. I still am a little bit cautious though, Oliver. That we definitely reclaimed a fair amount of levels here. If we look at the E-mini S&P 500 or even the S&P 500, we're pretty much now back to that first wave of this three-wave cycle to the downside there. I mean, if we get above that, that means we're hitting all-time highs here fairly quickly, and then we could try to ramp up to the upside here. Now, this is the E-mini S&P 500 futures chart, and the reason why I bring this up, you can see that I also added some Bollinger Bands, and these wider bands, that red line on the top side as well as that orange line on the bottom, that's a 2 standard deviation from where this moving average, this 20-period moving average. You can see on the way up, we've touched the lower end of that Bollinger Band. We saw a little bit of a bounce in prices. Once we hit the upper end, that's usually when we kind of see a pullback here. So we're getting kind of close. If you're looking at the E-mini S&P future, sitting at around 6,100, 6,110 or so, where we'll start hitting the upper end of that band. Might see some resistance there. Maybe we come back once again, pull back, retest some of these key levels and try to push higher. I'm still on the volatility and seasonality camp though. So we need to make as much gain as possible as we have earnings kind of coming up. We have some Fed meetings coming up. We're going to get more clarity from the Trump administration. So this is looking really good for now, really constructive. This is bullish. But once again, I always kind of go back and say history and data for me kind of says vol should be higher and it's not. And take advantage of that low vol while you can.
Okay, I like that. So that VIX seasonality element too that we talked about coming into play, right? We discussed that this morning.
Yeah, that's the one that comes into play. I mean, if you're looking kind of at the average, we're about 3 points, 3.5 points lower than what we've seen over the last 15 years. And so can it go lower? Yes, the VIX can go lower, probably another 3 points or so to the downside until we get to some really extreme levels. And those extreme levels to the downside, when you're looking at a 12 VIX, Oliver, in my opinion, if you're a trader, an intraday trader, or even just a swing trader for that matter, that also coincides with kind of boring markets. That's when we get these compressed markets that we've seen, these range-bound 30-point days where we have 15 points to the upside, 15 points to the downside. Those get kind of boring, and that's what we really kind of don't want to see. We want to see the VIX kind of staying around this level, maybe getting a little bit higher, and that's where the real alpha gets in the market for a lot of traders here. So technically, we're looking bullish for now. Liquidity, we're looking bullish. Credit spreads, looking bullish. Everything is saying yes, this is going to continue. For now, the 24th is usually where we see that big spike. So
nice.
Let's see what happens on the 24th.
All right. We got a 3-day window here. Maybe this week we get some fun. Appreciate it, KG. Good stuff.